Hey everybody, welcome to Trading Capital's exclusive analysis. Today is currently September 20th, and as we had the FOMC interest rate decision, the Federal Reserve today paused. Jerome Powell came out, and for the first time in a while, we saw him reading from his iPad. It was one of his worst off meetings, in my opinion, as to how he handled questions and the overall dynamics. A lot of the verbiage was very, very repetitive, but overall, it caused a sell-off in the markets. You can see the Qs traded down on the session at 1.44%. And they traded with a volume of around 45.38 million shares, still below the 20-day moving average in the volume. So really for an FOMC day, a federal interest rate decision, it really wasn't that astonishing volume. And in terms of the sell-off, obviously you're going to see this upsloping trend line, which a lot of people in FinTwit in the finance community are watching. This is a very, very powerful trend line, which we have now broken. But really, if you simply adjust and connect it from this major pivot low, and then you draw the trend line basically connecting through this pivot low, you can see we're coming up into that support very, very closely. So don't be surprised if we see some sort of a bounce in the market. If we actually remove this trend line right now and go back to the original one from here, I think that we could see a little bit of a retrace, and that's going to be the big test for the bulls. Right now, there's still a potential for this pattern to turn bullish. You still have a left shoulder, a head, and now, is this going to form a right shoulder to basically give us that neckline, head and shoulders break? Time will tell. But obviously right now, there's a lot of aspects to the market that we have to be careful of. You have to be aware of the fact that the dollar closed at a new, or pretty much closed near the highs of today, closing above that 105. If you look at the US 2-year yield, despite the Federal Reserve pausing rates today, it actually shot up and made a new cycle high. So this is the highest the 2-year yield has closed since really we've started this hiking cycle. You know, if you look at the previous peaks over here, especially over here, this is where the KRE, the bank started, the regional bank started collapsing. We're now surpassed that level, but the inflation rate is actually lower than what it was at this level. So it's very, very interesting to see the Fed pausing, but yet the yield market really didn't believe the Fed and continued to power through. So here we have the 10-year yield with an inflation rate of 3.7% on the CPI, but over here it was 7.7. So the dynamics of yields continuing to move up despite the Fed is going to be telling. You know, we're going to have to see if the bond market is believing this Fed pause or if they're going to push the Fed and turn their back into the corner where they have to continue to raise rates. Overall, I'm watching the Qs because tech is the largest sector. You do have important breakdown occurring in the Russell. Notice the Russell, the IWM is triggering this head and shoulders pattern. A downside target takes you to the low end of this range around 167, 168. But right now, that's not a very good, healthy sign for the market. This is a bearish breakdown for the IWM, and you have to play it accordingly. If you get some sort of bearish consolidation where you develop some sort of a sideways price action, then there is a chance that you could short it to the low. Right now, this is not a guaranteed short, although a lot of traders would like to do it. Often you see market makers like to peekaboo this level. And the big telling question is going to be how the Russell closes on the weekly basis. So obviously, we still have a couple trading sessions in the books, Thursday and Friday. So you really want to see and wait for this weekly candle, because if this weekly candle triggers this head and shoulders on the weekly formation, it means the probabilities are much, much higher to see more downside. Obviously, with small caps selling off due to the higher rates, they're definitely more sensitive to the overall rate environment. On that note, please give this video a big like down below and stay tuned for more updates. Definitely take a look at tradingcapital.ca where you can find some of our trading insights and some of the long and short positions that we take. Take care, everybody.